Join us as we disrupt the global real estate industry, revolutionizing the future of property investment and ownership.
The world has changed. Future without boundaries is just around the corner. The way we live today can become obsolete tomorrow. A whole new dimension driven by the evolution of AI and virtual reality. Are you ready for the inevitable?
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, with the people. Floki, together, there is no stopping us.
Good afternoon, everyone. BC Richfield coming to you live from London. It's just gone a couple of minutes past midday, which makes it the same time aligned at UTC. Big shout out to everybody that's joining the stream live today, and also to everybody that watches this on recording. Please do remember, in terms of trading today, just going to ping this out there early doors, that we are in a US bank holiday. So we do expect that to have some kind of impact on the markets, especially if you're looking at anything traditional, which today actually we're going to put our focus across onto the altcoins. We're looking obviously for a position where Bitcoin can be ranging a little bit, and we really want to see these altcoins popping off, which they have been. So I wanted to take a look, obviously fueled by our wonderful fundamental analyst team over at the Bird Nest, some of their kind of top picks that they've had us invested in for quite some time. We can see here we're starting with RNDR, which actually as well, one of our members, Claudia, picked this out brilliantly on our live show last week, I think it was, or the week before. And we actually got to live trade this in the day, which was really, really cool. I think we pulled about 2.7R out of it and left some runners that went really, really crazy. So I wanted to take a look at some of these for you and align these with our kind of narrative and how we can use TA technical analysis to kind of overlay our fundamental feelings and, you know, bring together the best of both worlds. So big shout out to all of you watching. Apologies, a little bit gruff today, just a little bit of flu kind of kicking around over here. I was very fortunate to see an old friend of mine who came over from Estonia, beautiful part of Europe. Unfortunately brought with him a really strong kind of European flu. So do apologise if I sound a bit gruff. Guys, if you have got any questions, Seb, hello, mate, good to see you as well, then please do just pop them in the chat. This is a very open community, right? So I do just ask that you're polite and respectful to other members. Everybody's at different stages of their learning, and if you've got any questions, please don't hesitate to ask. Also, Whack, a big shout out to Whack and Zach. Zach is Whack's son, and you know, first in today, and I love the fact that your young boy is instilling that into you, my friend. Is saying, look, get yourself first in that chat, get the merit points you deserve, Dad. Absolutely love that. Craig, Trader Mum Joe, Gio, all real regular attendance here. Our lovely Erica as well, of course, as well. To Wesbourne, good to see you on here as well, mate. Sebster, really, really good to see you on here as well. I know we've got a lot of people in the background. We've got lots of viewers there, which is really cool. So I'm going to stop jabbering on as much, make this large. And let's take a look at where we are. So RNDR, we can just see that this has been an absolute beast, right? So if we zoom out here, we're starting with a nice clean chart, and we're looking at what levels we're looking at for our expectations. So I'm just going to draw these in first of all. These are the clean swing highs that we have. That will almost certainly be the target for price. Staying quiet as having a bad day. No one wants you to have a bad day, Erica. If there's anything we can do to resolve that, you let us know. And if there's any charts that are giving you any difficulties, let's map them out and see if we can turn that bad day into a good one. Tammy, good morning to you as well, my friend. So as we got to here, something I always think is really important is when we kind of establish these key swing highs or these target points. The reason that we want to target this is because this is where we have liquidity resting. It means that typically larger accounts kind of target these areas in order to either manipulate, for want of a better term, or to offload positions. So I want to just show you this one here, all right? So this high, when price came into it, do you notice how we reacted here? We had something that I will call a strong close, right? Meaning that you get a higher, like a large bodied candle come above. We've got wicks either side of this, right? But if we're looking at this in terms of how we would look at it compared to what you would see for a rejection, for example, then what you want to see are those wicks making that nice strong close above. So as we can see here, big body close above, this area kind of turns your typical support to resistance flip. Price ultimately continues upwards. Now, we don't want to really mess with the trend. We want the trend to be our friend, as we say. The trend is our friend until the end. So if we're looking at our most recent one here, right, what we can see is we got this strong close above again, meaning that the start of this week, yeah, for me is bullish on a weekly scale up to this level here, which is 6.661 for RNDR. All right. Solek, good afternoon, my friend. Yeah, sending you lots of love, Erica. Obviously, anything we can do, grab us in the chat or Twitter or wherever or live today. And I'm sure we can work together to rectify it. So from here, I'm going to move down to a daily chart. Now, on the daily, you can really see how this level got respected, right? So if we just zoom in, and guys, if you need me to make any of these lines larger or more prominent, do let me know. But look, so we can see here, the close above this level, again, you can see, look at the candles. See the large body, the small nose, which is what we would call the upside wick on a bullish candle or the downside wick on a bearish candle, followed by the long downside tail, right? So this tail here is telling us a story even in itself, right? You can see how price is getting bought up here. You can see it again here. Now, what we had here when we closed above is we set this kind of, I think people used to call it like a gravestone doji. It's a bearish candle, right? But with such a small body, any doji candle is typically an indecisive candle, yeah? And what we can see here is how price was really trying to come up here, got sold off all the way back until this area was confirmed as support. We failed to close under here, so this next daily candle told us a lot, right? We wicked back down, recovered this level, ultimately closing above with another bullish candle. So on a daily scale, if we really look left here, we've got a lot of clear chart, right? If we go right back to here, we can see we have a couple of smaller internal range highs. But once again, as you can see where I've left my cursor here, and in fact, I'll just go back and pop this on. Right, we can see once again how we've had this strong close above that level, yeah? Now, this is the difference. When we first engaged with this here, which was on Saturday, look what happened with the daily close. Price came in, pulled back a little bit, ultimately closed below. Now, yesterday's close above, that was our indication, along with our weekly bias. Remember, when we zoomed out to the weekly, we said the start of this week, which is this candle, Monday, we're looking for bullish trade setups. Now, the daily is also aligned with this, yeah? So in terms of how we look to get involved in that, we now want to move down a time frame. And sorry, the reason that I put this on here was to show you how, as we did with our weekly levels, and we saw how the daily reacted to them, now looking at our daily levels, which was the prior swing high, which we've marked with this orange line, look how that level was respected, right? Rejection, 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 rejection. We get that pop, and again, you'll hear me use this term, a strong close just means a higher bodied close, right? You want to see the volume of the trading, right, is done in the body. The wicks tell you where price is attempting to get to. The bodies tell you, you know, what has been achieved. So price tried to get to it, forced back just a little bit before again continuing bang, 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 bullish, bullish, bullish. We actually had a good amount of this run during the Asia session last night. But what's quite clear to see here is how this area of that was rejecting price, resistance, we're now looking to flip this to support. So what do we want to look for when we want to get involved in trades like this? Well, we want to look for areas for price to rebalance, right? So what we have here is a 4-hour fair value gap. Asara, my lovely, lovely Asara, just such a dear friend of mine, someone I was so lucky to meet, such a talent in so many ways. How wonderful to see you on the show. I'm sounding a little bit croaky today. So maybe not the normal dulcet tones, but it is so lovely to see you on here. So this is the area we'd look to target. Now, we can see 8 o'clock this morning, right, as we came in, and there will be some hindsight to this, obviously, guys, but we are going to sit there, review ACH. Sure, to Wesbourne. All right, let me make a note of that, mate. If we get time towards the end, we will take a look at ACH. Hey, Nick, how you doing, buddy? So we're going to look at some hindsight, look at how this played out, but we're also going to look at some live setups so we can get, because ultimately I'm looking for price to come up to here, right? So we can see this line here. That's the target for me, right? That's where I want to see price come up to. That's our key liquidity. That's where liquidity is resting. So we just want to look at how we can get involved on the way up to there. Now, if we were trading London, we would have had this fair value gap marked out, yeah? Meaning that it's a gap between that wick and that wick of the 3-candle pattern, yeah? So as price looks to expand up, we see that price comes back down into here. So this is where we would look for our setups, right? And it's all very much dependent on what type of time frame trader you are or what kind of system you want to get involved in. However, something that I always really, really like to do is look for some form of inducement within a kill zone session. For me, I run these from 7 o'clock in the morning until 11 o'clock in the morning UTC, slightly longer than ICT, who obviously I learned this concept from many years ago, and the same with the New York sessions. But basically, for confirmation, we want to see price engaging with a high time frame bullish area, okay? So this grey box, as we can see here, is our FVG H4, meaning this is the fair value gap we targeted from the 4-hour chart. Now, aligned with our high time frame bullish bias as price pulls back into this is the area that we're looking to take long setups, right? Something I like to see is price sweep a low, what we would call inducement, okay? That tells me that price is then getting ready to make a move, yeah? The other thing you can add for extra confidence is look for aligned bullish fair value gaps on your current time frame, yeah? So here we're on the M5, for example, so we've got the FVG M5. That's overlaid within a 4-hour fair value gap, and you can see how we're starting to stack confluence here. Now, one of the best or cleanest ways to kind of learn a model like this is to find the swing high. So this, which broke, yeah, so this is what swept liquidity. This is the last swing high before that happened, yeah? So this is where we get our shift in market structure. From there, you want to see displacement, meaning you want to see a high energy move through that level, okay? Then if you get a fair value gap left as you did here, you could take an entry similar to, say, a 2022 model. This one, unfortunately, you'd have to kind of pull your stop loss back to here. Once we break above here, we confirm this area as an order block. So we don't have to go all the way down to the wick. We can go to the lowest body of the black candle, yeah, the bearish candles, because that's the order block that we've set. Now, ultimately, what we're targeting is all the way up here. However, obviously, especially on a day like today where traditional markets, well, so not traditional markets, but when the US are on a public holiday, we expect slightly lower volume. So what we want to do is zoom back out again and ask ourselves if there's any interim targets along here that price could be reaching for, right? So we're on the 4-hour. And as we zoom back into here, we can see we've got a very small swing high here. Maybe this kind of fair value gap, 6.076. So we go back to where price action currently is, 6.076. And we can see we've already made it above that. So if we're struggling to pick out our targets, right, or if we want to set an area whereby we can set a take profit, we can also use standard deviations, okay? So we want to take the manipulation leg, which is this high. Yeah, that's the high that swept the low. And we want to then just expand that up with the Fibonacci. And we want to take our profit at 2.5, okay, which is that line there. That means that we can move our stop loss up to entry here. We've got 1.3R return. And then we can just enjoy the rest of the trade stress-free, all right? We only have a couple of dollars in fees here because we've got such a nice percentage here, 2.31. So basically you take out enough to cover your fees, maybe trim a little bit of profit, and then we'd be leaving runners for here. So, excuse me. So hopefully that's all fairly kind of clear and self-explanatory. There is a lot more information available in some of my previous live shows, which you guys can all get access to for free on the Verb Nest live tab on our YouTube channel. But for now, we want to see what opportunities are waiting us forward-facing. So how do we get involved in this now, right? For me, I'm waiting for the New York trading session. Obviously, the New York markets, as we've already established, are currently on a bank holiday. However, I do test all of my strategies around kill zone. So for me, I wait until 1:30 UTC to find opportunities. So what we can see on here is we've got a ready-made area that can tell us two very important things, right? So all I'm looking for here very simply is price to do one of these two things. To pull back to here and give us the opportunity to long. How do we find that opportunity to long? Well, we go on to the lower time frames, just like we did with the 5 minute. And we want to see that strong bullish reaction, breaking market structure to the upside, and then we can find our entry model. Or what I want to see price do is close below this. Yeah, so that would require a 4-hour close. We've got 3 hours, 43 minutes left in this, so we would be quite deep into our New York trading session at the time. However, if we get that close, right, then for me, the next real logical kind of point that price can run to, if we look at our 4-hour chart here, is this. It's this swing low. And what's important about this swing low as well is what is known as an intermediate term low. Okay, so that's an ICT concept. As I do with anyone, I always recommend that you go to the source of the material. It makes up a lot of my trading strategies, right? Not all of it. But again, always fully respect that and always go to the source if you want to learn more. I'm happy to teach you how I interpret it and how I use it. But ultimately, that's where I learned it. And the concept of an intermediate term low is a swing low that's within a fair value gap. Yeah, that's the basic idea of it. That's certainly how I use it. And for me, they always represent really, really good liquidity pools. Yeah. So if we're here and we've closed below, yeah, we do want to be conscious. We have got a very, very skinny fair value gap here as well, right? So maybe it would be smarter to suggest that we wait for a close below both of them, because there is a chance that we could correct deeper, but still get a bullish reaction off of this, especially when we account for our premium and discount. Okay, so this is just a simple concept, right? That if you look at a dealing range or a trading leg, so a swing low to a swing high, so this expansion leg here, if we take a Fibonacci and split that 50-50 down the middle, which I've done here, then we favor long setups, right? Ultimately from the green area, because price has pulled back down into what we would call discount. So you want to be a long, you want to be a buyer in discount, right? This up here is premium, meaning that it favors to sell in premium. All right. Now, however, we obviously have to factor in the bullish nature of current market conditions. So for me to turn in any way intraday bearish here, I would actually need to see a close below this, and then I would move to a lower time frame, ultimately targeting this liquidity down here. So that's what I'm looking at the moment on RNDR. To Wesbourne, yeah, sure. Okay, let's take a look at ACH. Why not? Take a quick look at this and we'll move back to our AI narrative as well. So, okay, so here we are. Nice clean chart. Loretto Jr., good to have you here, mate. Welcome. See that beautiful pyramid in the background. I love Egypt. Very, very fortunate to travel there a lot over the years, probably 15, 20 times, and just dive in the Red Sea, but the pyramids, the Valley of the Kings, Valley of the Queens, but just the people as well, the Bedouin, just absolutely amazing people. If anybody ever gets the chance to go there, if you're from there, when you go into the mountains and stuff and have the traditional Bedouin feast under the stars, it's just, yeah, it's absolutely mind melting. So, interesting. So we're quite bullish on this at the moment. We can see we've got a lot of very balanced price delivery. So what I mean by that is that we don't see many gaps on the chart, right? The clear and prominent ones, for example, was when price was being supported here. So we created this gap. Yeah, remember, like we were talking about before, price comes back down into this gap. We took liquidity here. Price then returned to this, found a bullish reaction up to here. Ultimately, what happened is when we violated this here, that led to price having more downside. So if we get those fair value gap inversions, yeah, meaning that we violate them, if they should be acting as support, they then turn to resistance, yeah, then that's what we're looking at from there. The other thing, obviously, we're looking at that are key are the aligned fair value gaps that we have. So this one, for example, which is our weekly, the suppressed price here. So rejection, rejection, rejection. We're now drawing back up into it again. On a weekly scale, it'd be great to see us delivering from a weekly bullish fair value gap, which we're not. So what we want to do here is drop down and get to a more granular look. Okay, so let's just take a look at it on the daily and see if price kind of tells us anything. a little bit clearer, which it does. So we have a high here. So our first target will be 0.02294. Price is delivering from this bullish fair value gap on the daily. So we'll mark that up as our FVGD, which is perfect. And now for me, it seems like we've got a clear marker here. The one thing that I kind of be concerned about here is the fact that we've run this higher, my internal range higher. However, what I do really like, going back to earlier when we're talking about our concepts of intermediate terms, highs and lows, is, again, if we look at this level, right, what we can see is how price closed strong above it, yeah? And then look at these downside wicks as price kind of recovers it. It's not incredibly clean, but obviously with some of the lower cap assets or any cryptocurrency, really, you can, the more illiquid nature of the market can leave these looking a little bit less clean. However, we can see that a strong close above this, we're holding this level. My expectation would have been at the start of the day here for price to come and take out this swing higher, right? We've now taken that, so now we need to see a little bit of further confirmation, which we're going to look for on the lower time frame. Bear with me 1 second, guys. Just going to blow my nose and save you all the horror of having to hear that. Perfect. Right. So now we're going to drop down to our 4-hour chart, right? We've got a clear indication here on the daily. Yeah, the other thing that I really like about the daily here is if we close this today, yeah, this fair value gap, the one that's been rejecting price, we see rejection here, an initial rejection here, price pushes up into this. What we want to do is see a daily close above it, which would then turn this to an inversion fair value gap, yeah? And then that way, say price closed where it was around about here, we'd have even more confidence that price was then reaching up for this higher. However, as it stands, our bias is bullish. We've got a bullish setup here. So what we want to do now is go down to a slightly more granular time frame, which we've done with the 4-hour. And as we said here, this is our daily level, right? So at the moment, that's the level, which is 0.0225 that is capping the market, okay? Now, we have put in a relatively skinny order block here. So let's draw that in so that we've got that on the chart. And that's quite simply the principles that I use for this are that I want to see, obviously, for a bullish order block, I want to see a down close candle. Hey, Hans, long-term friend of the show, of mine and of the Nest. Fantastic to see you, mate. Hope you've been keeping well. So we've set our order block here. Right now, for higher probability order blocks, typically you want to see larger bodies on the candles, right? Or, for example, a multitude of candles. So you see when we got this one here, now all of these make one higher time frame order block. So if you have consecutive candles, I make an allowance for all of them, and I take it from the top of the body for a bullish order block or the bottom of the body for a bearish one. What I then need to see or want to see is price close above it. My expectation then is we have two things. We first of all confirm this as a bullish order block. This should support price, right? And it also means we have what's known as a change in state of delivery. That means that we're now looking for the next liquidity target, right? And as we do that here, we've already taken out this swing high with this candle. So if our thesis is correct, then we'll be reaching up for here. So now we're saying to ourselves, okay, well, if we put this in here, we can see we closed above it, having that nice close above. Price then came back up, ultimately took out this higher, right? So now we're still bullish, but what would be great would be to see some strength above here that allows us to step in. Because if we can close this candle here, let me just move this back so it doesn't become distracting. Form ourselves another order block. Yeah, then what we can see is how we stage these and we build these as we go. Build this area, come back, treat it as support here, price moves up, set another order block here. What happens? Price comes down, closes above this, takes out liquidity above, comes back down into this area, yeah, for more fuel, if you like. Think about it in the most simplistic terms, right? That you've got these, basically, these are like fueling stations. As price is coming back in, it's taking a nibble before it then looks to move away. But we do need the close on this one here, yeah? If we get the close on this one here, above this, then we have this swing high here if it doesn't go beyond it. But ultimately, our target remains here, 0.0225. 2294. And in terms of trading this, guys, you would treat this like you would any key level, like any good support or resistance flip. We engage with our order block, which is here. We're within our kill zone, right? So this is what we're looking for. And then, like we said, you're looking for price to sweep liquidity as it does here, takes out this low, delivers from this 5-minute fair value gap as well, which is just beautiful. And then you're looking for your long entries here, right, as price displaces above this high. And then ultimately, as we came back into this morning, this was in London. Yeah, just to remind you, this is our key high time frame order block. So when price is dipping into this, we're aligning this with our kill zones, or I am anyway. Then when price comes into this here, we can see ultimately we're looking for that sweep of liquidity, which we get. We look for that market structure shift, which is here. And again, we can then target 1, target 2, which is resting up here. So by the time we get down to this level now, I think the interesting point is going to be to see if price has the momentum to run up to here. Ultimately, it's still chasing down our higher time frame target that's up here. All right. So this kind of interim level is a 0.2244. Stone VC, not Raoul, mate, I'm afraid. It's BC Ridgefield here from the Burb Nest. Hans, my name's giving me shit. Been watching, but chat only popped up. Sorry to hear that, mate. Probably, you guys probably suffering some load shedding over there as well, aren't you? It can be an absolute nightmare. Sebster caught along on some ETH yesterday, took some profits. How long would you hold it for? Here talk of 3,031, 3.5. I mean, yeah, they're all round numbers, right, Seb? So basically, you know, especially in the crypto space, run by the degens that we all are, then round numbers tend to get quite well respected. Hans raises a good point as well. Hello, mate, Stone VC. So yeah, Hans raises a good point as well about natural gas, which we'll go on to in a minute. But we'll get back and kind of take a look at our AI narrative too. But do remind me, Seb, we can take a look at ETH shortly and see where that is. So hopefully that kind of sheds a little bit of light on there for the person that asked about that, which I believe was 2 Wesbourne. So, I mean, the levels are all here for us, mate. I think we close this candle here. We need to remember this then confirms as a swing higher. And it depends on your time frame for how you're trading this. But overall, really, I've kind of got my eyes on this 0.2294 level. Does anybody else have any, especially aligned with the AI narrative that you particularly wanted to look at? I've got a good list of them here, everything from AKT, AGIGS, SDAO, FET, Ocean Flux, CTXC, RLC. Let's take a look at PAAL, actually. Let's take a look at our old friend PAAL and see how that's been getting on. Right, let's see. Wow. So again, you can see obviously immediately as you come onto here, huge reaction here. One thing I'd say this chart shows really nicely, you'll see people draw these as support resistance lines. Not saying they're incorrect, absolutely are, and I've seen it work a lot of the times. Someone like Axel Kaibar, for example, who's exceptionally good. No, I can take a look at FET, mate, absolutely. There's 2 ways to look at this. One is the price keeps trying to get past this level, hasn't achieved it. We then get a strong close above it here, meaning that there's an expectation for price to move higher. The other way to look at it is that within these swing highs, you have a lot of resting liquidity, right? Meaning that it gives the opportunity for willing buyers at these levels. So you've got stop losses here, for example, so you can see pumps into them. Now, of course, we don't actually have much data here when we look at this on a weekly. We can see we've had this huge expansion candle. So there's 2 things to consider when you have huge moves like this. One, it's very risky to short. However, it can be very, very logical to do so, because if you see overextension in a market, the chances of a correction are much higher. However, what we need here is a lot more data, right? So what we're looking at is we're moving back down to a daily time frame now to see where price may be correcting to. Now, if we put in our principles of premium and discount again, so that's from the last swing low to the current swing high, as long as it confirms. If price, however, does this, yeah, and goes higher and then confirms another swing higher, then ultimately we would extend up to there, all right? So until a new swing low is created, in which case we then have a new price leg. So considering this, and considering that we want to see price move higher, our first kind of target here on a daily scale would be this fair value gap. If we wanted to see this in really textbook fashion, yeah, then we'd want to see price correct down into this part, which is the discount part of our premium and discount range, right? That's higher probability then. If we go in there, we look to the lower time frame zoomed in, and we get our pattern where we see the sweep, expansion above the high, and it gives us the chance to get in, then that's exactly how we would look to trade this. All right, so sweep of the low, break of the high that swept the low with displacement. That's the lower time frame model we would be looking at within here. Yeah. So just so that you guys are aware of that, that's certainly how I would look at it anyway. So now we've got that. I mean, obviously, look, this thing is just shooting up into all-time high territory, right? And when it's breaking new ground like this, it's very, very difficult to set targets. The one thing that we can do is we can turn back to our standard deviations again. Yeah. Now, I think we far exceeded this one, but one that really stands out to me here is we take liquidity from this side of the market, right? That then forces price down into a corrective move that then takes liquidity from the lows here. Okay, just draw that across so it stands out a little bit more. Now, once we sweep that, we can see we get a nice bullish reaction from price. And this particular one here would be great for the kind of breaker line method where you see that big, look, bang, 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 bullish candles. So when you get the close above, you can just find this line from the high, and you can put a limit order on it. When you retest that, you've got a really nice and easy pre-made stop loss here underneath this order block or below the swing low. And again, as you go up, you can look at your targets. Now, with this manipulation move down that started the leg, what we want to do is measure it from bottom to top and then use our standard deviations here to say, okay, what was our expectation? So 2.5, we'd want to adjust our stop loss. So we would have still got a nice 1.6 trade. However, we typically target 4 for runners, and we can see that this now has really kind of run and overextended beyond that. So in terms of this, it feels right, or right is probably the wrong word, but it certainly feels sensible for price to come back and kind of cool off here for a little bit. So what can we do? We're back on our 4-hour chart. This is what we want to see from our high time frame. Well, just like we did when we were looking at RNDR, we can see we have a higher time frame fair value gap here, our FVGD, showing that it's the daily, right? So then we're saying to ourselves, okay, well, we now have this on the 4-hour as well. And we can see that this kind of overlays nicely. So what we actually want to see is, as we've discussed here, price kind of come down into this area, right? And then hold in here, and on a lower time frame, this is where we'd be looking for our bullish setups. However, if price does this, right, without the wonky bit on the end, right, closes below, then ultimately I'm looking for price to hunt down liquidity lower, and my next option here is this intermediate term low. Right, and remember, it's just a low that's within a fair value gap. For me, there's extra confluence there, and we really should be, there should be some decent liquidity there. And what that tells us again is that if we really close strong below that and don't show that any respect, we would then look, so if we really come down and don't respect that, we would then look for price to pull back, and then we would look for bearish setups down to liquidity that's resting lower, okay, in the form of these lows and the liquidity resting below here. So ultimately, when we go to the charts, we've got a plan for whatever price does. We don't want to, or I never want to go to the charts and be enforcing my will on the markets, right? I don't want to be going there saying, this is where this has to happen, this is where that has to happen. We just don't know. What we do is we take a high time frame trend. It pays to trade with that trend, right? And to be in line with institutional order flow until we no longer do. And we look for signs like this that tell us when price is going to reverse. Now, that doesn't mean that we're then just ultimately bearish all the way down to Hades here. It just means that this might be correcting deeper and could still regain bullish form, right? But it also gives us the opportunity here, to trade what is ultimately a 14.5% range between there. Yeah, that is absolutely tons, especially for day trade. So plan remains really similar here. We high time frame bullish, so we're looking for bullish setups. For me, I'm looking at this 4-hour fair value gap, which rests between 0.29133 and 0.31697. Okay, should we close below this on a 4-hour scale? Has to be on a 4-hour scale. then I would look first of all to this intermediate term low, which is again a remarkably round figure of 0.25000. Okay, so let's take a look at FET. Excuse me. Let me just catch up on a couple of the chats as well. Yes, Seb, remind me, and we will take a look at ETH shortly as well. Yeah, natural gas is looking really, really dicey. We're going to take a look at VET now, Stone VC. So hopefully that's of interest of you. Yeah, Seb. Yeah, some very good advice here. You know, not saying that you would do necessarily, Seb, but for anybody that's out there, very difficult when you see these things run. Even more difficult, I can assure you, when as a team, as we do at the Bird Nest, you work together for a long, long time to try and catch these kind of narratives, and sometimes there's some kind of catalyst that just allows them to take off before you've managed to get involved. What I would say is, looking at this chart here, and Hans' advice, which is don't chase pumps, which I couldn't agree with more, is whenever you have these big moves, right? So like this one here, for example, yeah, let's get this. So, you know, we took out that level, closed above here. That for me was a super obvious level to get to, right? Simply because as we zoom out, we can see there's not really many other areas, right? Yes, you could be rejecting at these FVGs here, but what you can do is you can just extrapolate them across, wait for the inversions for your confirmation, right? So get to trade from the close here up to here, which is a massive move. You can then be cautious, wait for this close above, trade it up to the next one here. Yeah, see, we get the strong close above again, price comes back down, and then ultimately reaches up and takes out our key liquidity target here. Your other option, yeah, and that's very much how I trade. I love to trade like that. But your other option here is, and especially since you've taken liquidity here, it's always worth remembering that most of the time, if price takes external liquidity, right? Exactly right. Beautiful thing to say. And that's why it's on my Twitter profile. Go playing it level to level. Yeah, don't try and enforce your will. Don't try and be thinking about price going to all-time highs, all the other stuff. Just break it down into a level to level way that you can profit from it on a daily basis or a weekly basis, depending on what kind of time frame trader you are. So this big pump here, right? Massive pump, right? When you take out a key liquidity level, quite often, the reason that you see these big pullbacks, right, or any kind of pullback, is to punish people who get in late. So someone like Bird, for example, who's a brilliant example of this. You see a sweep, you see a breaking structure. He uses the B Pro for this, right, which is our in-house indicator. I can pop that on so you guys can kind of see a little bit of that in action as well. There we go. Right, so for somebody like Berg with this kind of system, what he's looking to do here, get rid of that, still stuck with the pen mode on. Right, he's waiting for the change in trend. All right, let me clean this up for you very quickly. So with the trend trailer, something like this, you can see this is where it goes bullish. Yeah, because the black line that's holding price down here is keeping you bearish, meaning that you're only favoring shorts here. Now, when Berg gets this breakout signal, yeah, he's trading this up to the next liquidity levels and then waiting to see if this breaks before getting out of the trade. So that goes to show you the strength of trend, yeah, because from here, this is when this flicks bullish. So Berg's opened his position here. His stop loss goes below the price swing low. This is the clear liquidity level above, right? Or he's then not closing out of his trade until we flip bearish. You notice this candle here. So this candle closed. So that's when you're out of the trade. 2.6R, yeah? Now from here, depending on your bias, what you're doing is you're either then looking to get back on form with the master trend, or you're looking for areas that price can ultimately find support. Right? So you can see it here. Price gathers support within this fair value gap. See how the bodies respect it. It's not closing below. So even if you were using, say, the B Pro here to get your entries, you would have entered here after the trailer's flipped. You can put that on the low of the order block that you've left behind. And then ultimately your initial target is going to be something like this. The key resting liquidity above. Obviously help if I use the right if I use the right long or short setup. Yeah. And then all you want to do from here is you then just want to look left and you want to say to yourself, okay, well, where's the most likely place beyond that? Or here, I would say. Yeah. So that's the nearest swing high that we could target. And ultimately, that's how you would use a system like BPro, right? It's just a ready-made system that keeps you in line with the trend. For me, especially on an intraday basis where there's a lot more noise, I'm I'm saying to myself, right, well, if we've swept liquidity from a high here and price is now looking to rebalance a low, well, where's my first point of interest? Is this. Yeah? My first point of interest is here, and we can see how we get support. I'd still be bullish here. I'd be expecting price to find support here if we're bullish and then move up to this high. As soon as we close below this, however, yeah, then my bias flips. Then my expectation is, okay, we've not found enough willing buyers here. Yeah, this has now become an inverted FVG and an important one. Price closed below. We're now looking to the next point of liquidity, which is either this fair value gap or this swing low. Yeah. Had we closed below this, I'd then target that. Does that make sense? The fact that we held this here is bullish, meaning that then we can look for other signals, right? Other key indicators here that let us know. For example, this intermediate term high. Yeah. So we can see here, intermediate term high, rejection, deviation, rejects back under, strong close above, and it closes above our previous fair value gap inversion. But the key thing I'm interested in here, and the reason I wanted to show you this is, again, look, when you get this and price closes above, look how often it really respects this. However, the other thing that you should pay attention to here that has even more relevance is this. Yeah, when price closes above this fair value gap, because then it's telling me that the nearest point price will probably want to run to is this swing high over here. All right. So I hope that makes sense. I'm going to now drop down on FET quickly. I just wanted to kind of explain that to you guys. So hopefully you can kind of get into, you know, why I'm thinking about this. So we had this beautiful swing high over here. Price again, strong close above it. So our expectation for the week is for price to move up to the next liquidity level. On a daily scale, you know, we're still super bullish here. We set this OB. So if you see a thick black line from me like that, that's the order block. We've set that. We've come back in. We progress high. We know this was the weekly level we were waiting to get above. So as Monday opens today, we favor our bullish setups. Now, we haven't quite reached the target yet, right? You're very welcome, mate. Very welcome. But again, we've set our order block. Right, price has moved away quite aggressively. We don't have a fair value gap in there at the moment. If I really want to get more granular, if the 4 hour isn't really telling me that, I will move down to the hourly, you know, but I really favor the 15 minute. Okay, again, it depends on your triple screen system here, but for me, this tells me a lot more. Yeah, so if I'm looking here and I'm saying, okay, well, let's look at our premium discount here on this expansion leg. We've got this nice, juicy, bullish fair value gap down here, right? So if we draw that across, pop this in grey. The reason I like labeling these up is it's fine for me when I'm on the chart, right? But for you guys, if we're flicking backwards and forwards between them, it's nice to get the context, because the higher the time frame, the more respect that we will put it out as well. And FET, yeah, FET, nice power of 3 setup. It has done it. Yeah, it's done it a couple of times. It does really seem to respect that, actually, Hans. So if I just pull that back to there, then I'm saying, okay, well, if I want to remain bullish on this, and ultimately our target is still here, this to me seems like a really logical play. Price will come into here, we wait on the lower time frames, find our setup, yeah, and then just watch it pop, right? You want to see that displacement. And what do I mean by that? Well, whenever you see a shift in market structure, right? So any of these key ones here, this is a really good example, actually. Within our London trading session, price has come and swept a low. Here's the high that swept the low, right? What we would call in one of my other trading systems, the breaker line, right? Quite often as well, it is a breaker candle, like the up candle before the sweep on liquidity. Price closes above, that becomes your entry, right? Again, crypto's a little bit messier than traditional markets, but ultimately price closes above, tags you back in on that very next candle. We confirm the order block, so our stops can go below that. You'd be looking at that to have at least a 1-to-1, which is quite nice. So you've got that. Now, someone like me, I'm quite risk averse, right? So I'll often move my stop loss to entry when we get to a level like this because I want to see momentum from price. Excuse me 1 second. Right, and in this instance, what would have happened here is I would have taken some profit, but ultimately got stopped out here. That doesn't worry me because all I'm then saying is, okay, is price going to make that same move? Am I still bullish on this? Right? Am I still bullish on this? And I absolutely am. Right? My higher time frame bias doesn't change here. We're still holding this key level. It might just be that I got into this move too early, or maybe I wasn't, I don't want to say right or wrong, but maybe it wasn't the best thing to do to close this trade down. We can see ultimately it wasn't because we've run really, really high. However, the market will almost always give you more opportunities, right? So for me, while I don't mind coming in here, but fine, I've been stopped out, all I'm then doing is saying, okay, well, does price give me another opportunity to get back in? Is there anywhere where I can see another sweep? Yeah. So sweep of a low here. And then I'm saying, okay, well, so price has swept this low. There's the high that the low was swept on, which was here. Does this look like we're breaking this level? Yeah. We're also within the realms of this order block, which I'll just do as a square. And ultimately still this order block as well, which is more important because it precedes it, right? So you see that support there, support. We've also got this order block here providing support. We've swept, meaning that we've induced. It means that we've ripped liquidity from one side of the market, which can trap people and then give us the opportunity to go to the other side. Josie, hello, mate. So here's our high, intermediate term high as well, nice, meaning that we see displacement and a close above this is telling us that price is reaching higher. We have a pre-made target here, right? So now we would simply, same principles, put our stop loss under the order block here. Here's our breaker line, price closes above, tags us in here, which means we get to tag ourselves in with a nice limit order as well, saves us some money in fees. And then we take out this higher. And ultimately, we just hold this for higher, okay? So this is what I'd be looking at here. That's the reason that I've shown you these, is because that's what I'm going to be looking for in here, right? For price to have that kind of reaction, regain bullish market structure. So in here now, in this move down, we'll probably see lower lows, lower highs, for example. Then we want to come down into here. Then what we want to see is price have that sweep of a low, the recovery of that shift in market structure. That gives us the confidence to say, okay, here's our sweep. Here's our shift. We can either look for a fair value gap in here to get involved in, or we can even just pull this across here, right? Make it our breaker line, and then mean that once price closes above, we set our limit order here, stop loss below the low or the order block that's confirmed, and then we start hunting down these untapped highs. So we wait for that shift in market structure. All right, guys. Yeah, very welcome, Stone VC. Hans, I always feel like I'm in the right cabinet, but in the wrong drawer with some subs. Looking back is one thing, but ahead is another. Yeah, completely agree. A lot of it comes down to conviction, right? In truth, one of the things that will change for anybody as you kind of take this on professionally or full-time is that it's the conviction in your data. The truth is it takes years and years of in the markets of testing different models, strategies to really become comfortable with your setup. So for me, for example, if I get that set up, and I'll show you something if I've still got it up actually on the chart, just as full disclosure, I shared this with our members. Right here, look, you can see over this period here. So my bias is set within here. I have a bearish bias for this section here, which I highlighted to members using our vertical lines. And you can just see in here, right? Obviously, as a low time frame intraday trader, once my bias is set, the red line, that's because we inverted a 4-hour fair value gap, yeah? Then as we've set these, look, that's what my bias is, I'm short. But this is why, this black line here is where I move my stops to entry. So we've got like 1.5 hour here. Price got stopped out, no problem. Got the trigger again here to go short. This was a much nicer one, 2.5 hour, good win out of the trade again. But the fact that I got stopped out of the short here, even if this had been a loss, right? It was only a small profit trade because it took enough to cover fees and price ripped back through it. But it shouldn't affect your confidence then to trigger your next short setup, right? And then back here when we're long, for example, when we're short again, so short bias here, you can see they're all short trades, right? Now, these are 1 minute chart trades, right? So I'm not convincing or encouraging you guys to go away and do this kind of thing. But this was before we flipped bias. So we took a long into the highs, right? We then come back down, took a short based into this based on a momentum reversal of a high time frame level. Then when we inverted this 15-minute fair value gap, yeah, then from here, I was like, right, the high probability is that price is going to chase down liquidity below the lows, just as I showed you before, right? So in this case, it was this low, which is why you can see the bottom of this is set to that. Now, nice trade here, nice trade here. This one caught a scalp as well. Then price in the PM session, which is quite often if you have a really good AM session, then I probably won't even trade the PM. But you can see in here, right, how price was quite choppy. Got down to an original target, price came back, stopped us out here. Got back down to target one here, price came, stopped us out again. But none of those happening affected me in terms of my bias, right? Because as I zoom out, all I'm having to ask myself here is, okay, well, where am I bullish? Where am I bearish? And if I'm making that allowance based on the 4-hour FVG and saying, okay, when we close below it here, which we did, then my expectation was for price to run out these lows. You can go and take a look back on my Twitter feed for anybody that's at the nest. It's all on my trading channel, which you all have unlimited access to. So overlaying that again now, and forgive for the messiness on the chart, but obviously I was doing a lot of stuff with the TVN team last week on it and the members, is that we're holding this. So this bearish fair value gap here, this purple box, when we closed above this here, yeah, then I'm now looking at that and saying like, okay, well now I'm bullish, yeah? So you can see that's why the green line's under there. Meaning that I'm favouring long setups here. So as we move into the New York session this afternoon, I can move to a lower time frame and say, okay, right, what do I want to see from price? And I can even do the same here, right? Looking here in London, we get a beautiful sweep down here on a 15-minute level, yeah? So we've got a long bias at the moment. Ignore the squiggles on the chart. These ones here are fairly inconsequential for us now. This should be just offering us support, and this is where liquidity is being drawn to. So I'm saying, okay, well, what can I possibly target in here? Well, if I'm going long in here, bear in mind this hasn't played out yet, I can see that we've got this, which is the high that sweeps the low, yeah, kind of almost within a fair value gap, sort of slightly above it. So if I'm then looking to day trade this, I'm saying to myself, okay, well, where does it give me the opportunity to get involved? Yeah. Now we have a really, really big sweep of this level and a really, really strong recovery, right? But within doing so, we can see we also get an internal sweep. We set this higher, which we close above. That can then become our breaker line. Yeah, so we set the high, come back down, strong close above this here. We set this order block. So what can we do? We can put our line on there, our stop loss under that order block, and then ultimately this would be our first target here at 2.16, and then up to here. We would have, again, got taken out of the first target here. This is the way that I trade, guys. I'm not saying you have to do the same. You know, I like a high win rate system, but I do appreciate that it does have a lower reward for the risk, which is just the nature of the system. And then what we'd be looking at here is if we wanted to get back in, is we can see we get another sweep here. Here's the high that swept the low. This would be our breaker line, for example. That would be our entry. Unfortunately, the stop loss on this would be really, really big. So we'd only be having a 1.3 risk to reward. But it's having the conviction in where price is going. Yeah. So price is going up to here. Now, what you would also do is I'd be very aware of these kind of relative equal highs here. Yeah. Because that can reject price as well. Like I say, for me, I would only take these within a kill zone. So this one's okay for me because it's just within the end of my London kill zone. The price has swept liquidity. This one wouldn't really meet criteria, although I still do expect price to come up to these highs and ultimately to this one up here as well. So look, we've got a few minutes left in the session. Let me just take a look at ETH for us. Yeah. So on our weekly scale, what we're looking for here, let me just hide some of this. We can always get that back up. Perfect. Make a nice clean chart. So where's the next swing high or potential liquidity target? Is here, right? Excuse me 1 second. Oh, I'm back. Sorry, little sneezing fit there. JD, seeing your take on ETH in both high time frame, low time frame. Awesome. Well, let's do exactly that, my friend. Let's do exactly that. So this is where I'm looking at here on ETH. Key swing high, intermediate term high, because it's within a fair value gap. Just overlay this on here as well to just show the significance of that, because that has kept price suppressed for that time. Yeah, so that's our fair value gap weekly. That to me just looks like a beautiful target. If you're a big player, yeah, you're going to be buying. The whole idea is, and it sounds cliche, but you're buying low, selling high, right? So for argument's sake, let's just say you're in wherever. Let's say you get in on this pullback here. You know where your risk is under here. You're targeting this level. You're doing so with a lot of money, right? The reason for that is you need to offload that to willing buyers, yeah? And we know there's willing buyers above here because people that were short here have their stop losses there. When they get triggered, they become market orders, meaning that you can take the other side of that bet, yeah? So you've got big box up here, right, of market buy orders because people are short here, yeah? So if they're wrong, they come into here, they're basically buying back less, therefore it floods the market with that. Then when price goes up, yeah, when we're looking at this level, if a major player or major players or enough people want to get together and they're targeting this, first of all, they're targeting that area to sell to. If they're then looking for this to be a rejection, there's a whole world of ready-made buy orders for them to fill with their sell orders. Flip that bearish, and that's when you see these big momentum shifts in markets. Yeah, that's why when we see kind of key highs and lows, we're looking for how price reacts when it gets there. Do we reject? Do we step back underneath? This here, abnormal wick, right? We get that nice strong close above originally, so we wait for that pullback to long it, but the following week after we close below, right? And then look at the weakness, the upside wicks, price can't get back above it again. So then we say to ourselves, where's the next key liquidity resting? Is here, yeah, under this swing low. Then what we see here, big purge down to here. But ultimately, when we're using our fair value gaps here, and this is a little bit messy, but as can be crypto, we see here that we expect that to reject. When price closes above, it gives us an indication that it really wants to kind of move higher. So we look to target this fair value gap, this rejected price here. So ultimately, when price returns here, we expect that kind of rejection again, unless we get a strong close above it, showing us that the bulls are really in control. So that's what gives us our pre-made targets. Now, if we're looking at our recent swing highs as well, like this one, we see a strong close above it again. We've got no reason to not be bullish. So on ETH, on a weekly scale, I'm bullish up until this kind of area here, probably the start of this fair value gap, which is, let's say 34.11, yeah, 3,411. So going on to a daily scale where we get more context, we zoom in a little bit more, we can see we've had that nice reaction, that strong close above, and price is delivering from our bullish daily fair value gap, right? So now if we look left, let's look at what liquidity we've got to target, yeah? And what we have over here is all this lovely resting liquidity above these highs. Really like this one because it's an intermediate term high. So let's just do that Actually, we'll keep that one orange. We'll do these other ones black. We're keeping that one orange because that's an intermediate term high. And we're going to have this one as orange as well because that's also an intermediate term high. So now as we move forward, we're saying, okay, our weekly level's up here, right? We can see the fair value gap. So we can see now we have these ready-made levels for price to reach to. So what we're doing is we're just looking for opportunities to get involved. And once again, as we're now looking to step into the New York session, we'll forget about London for the moment. Same principle though. In London, we'd have been looking for this to hold bullish. Yeah, and then on the lower time frames, sweeps and setups to get us long. Now what we're looking for as we come down into the New York session is, okay, first of all, is price going to hold this? If it doesn't, where on a 15-minute scale can it go? Because what I like about the idea of a potential short here is all this resting liquidity, yeah, straight into this gap. And the reason that I like that is it doesn't mean that price has to go into oblivion here. It just means if it closes down here, and doesn't respect this 15-minute FVG, which I would expect it to if the bulls were really prominent here, yeah, then you can see this kind of purge a little bit lower. Petavel, apologies, mate. I can't. My charts are always set up for white. I'm afraid. So with the black and white candles, unfortunately, if I darken the chart, the background will become a mess. I do apologize. I know it's not ideal for everybody, but I do. The white charts do really help me actually, just visually. So apologies for that. So that's what we're waiting for on here. We've got 30 minutes now until the New York Open. Again, I'm not really expecting much today. I'm certainly not trading today with it being outside of, with the US bank holiday, right? I think we're just going to see relatively flat. We might see a few pops, which is why I'm kind of looking more at the altcoin area. If we want to kind of refine it a little bit more, the hourly has this nice intermediate term low here, right? So if we mark this up, if we do, again, 15-minute close below, there's no hourly here, right? But actually on the hourly, we did just recently invert this. So that's showing a little bit of bullish pressure. Now, with our higher time frame target sitting above us, you might be asking, what would I then do to say, okay, on an hourly scale, what do I want to see for us to get bullish? Well, I want to see this close above, have a bullish close above, in which case then, my confidence is a lot greater that price is ready to kind of come up and ultimately make the move on these highs. Close below, like we said in the 15-minute, I like this intermediate term low, right? If we look at this kind of run up that we've had here, we have had a really, really strong run. Price could very well be due a correction, but ultimately we've just got plans to trade this both ways, whichever it takes us, right? We don't want to enforce our will on the market. We want to see what the market is telling us, and from there, look to pull out our own conclusions. All right. So look, I hope that you guys have found this session interesting. It's been really, really great to be live with you. As always, apologies, I'm not at my absolute best. We're going to be back live with you all again on Wednesday, hopefully feeling a little bit better by then. And also, don't forget, guys, a couple of things. We're over at the event over in Romania, which is going to be lots of really, really cool stuff to come out very, very soon. And also as well, you guys can receive all of our trading calls. We earned over 330% returns for our members last year from our trading calls. This used to be a paid for service. You can now do it with the ref link. So if that is of interest, you can find the link tree down in the description. I trade kind of traditional market assets using crypto via Prime XBT. So you can find a cool code in there that gets you up to $7,000 in discounts, and also gets you all of our trading team calls for free, which you can jump on as well. All right. It's been awesome having you all live. Thank you so much. There's been loads and loads of you on the stream, which has been brilliant. I'm going to be live again on Wednesday. We'll look at some of these charts again, keep strong with our AI narrative. And don't forget to reach out if you're interested in becoming a member. You can start from free. Thank you, Josie, and everyone as well for the kind wishes on getting well. I'll be absolutely working on that, and lots more exciting stuff coming up for you all soon as well. So thank you very much. Wishing you all a fantastic week ahead. Stay in touch, and hopefully we'll see you guys here again on Wednesday.